Hello, everybody. This is Amos Prosper from Amos Good Mods. So today we are going to be looking at I think you those in the community have seen a video that I've started. What I wanted to look at is the daily market range and all that, but it's going to delay. I'm going to look at the market structure because I noticed that a lot of people don't really even know what the market structure is. Before you can, however, get to that topic or any other thing in this market, you need to know your market structure. It's the most important thing as a trader. You need to know. If you don't know your market structure, then you don't even know what you are doing. You are not doing anything at all. So today we want to look at our market structure. For this market structure, then we can move on to other markets. So somebody will ask, what's a market structure? A market structure is also known as the direction of the market, where the market is going. And this direction of the market, we have it in three or more different forms. You have a scalper. A scalper is somebody who looks out for 5 pips, 10 pips, and all that. And those people look at the 5 minutes and 1 minute time frame to take their trades. Then we come down to an intraday trader. So an intraday trader is somebody who takes trades on daily basis. They sometimes look out for 30 pips. They take daily trades. So in the day, they can take like 3 trades. They take trades in the day. They don't hold positions for the next day. Everything, all their businesses is done in a day and they wash their hands of it and they are out. Those people look at a chart of 15 minutes, 30 minutes, and the 1 hour time frame. And some even goes as far as the 4 hour time frame. And we now comes to a swing trader. A swing trader stays in the position for the next day. He stays in the position for an average of 24 hours. So he holds positions for it to fall into the next day. Some people also call these traders weekly traders because sometimes they hold position for the whole week, but they don't. Let me use the chart to make a clear example of who a swing trader is. A swing trader, when let's take it at this side, he saw this opportunity, and when he takes it here, he will hold it. So the trend has ended. So this is a 4 hour time frame. When you take this position here, maybe we'll be looking at closing this trade at this high. That's what the swing trader was about. You know that a day trader might even close it and then he's done for the day. But this swing trader is holding it to his target as the trend for that particular trade ends. Just a swing trader. And then we have a short-term trader. These people can hold positions for as long as a month. Then we have the long-term traders who are the financial institutions, the banks and all that. They hold positions for a period of 3 months. That's how long they hold positions. So those people, the only time frame is the weekly and the monthly. When you meet them, you see this huge opportunity here. If they are in here, they are going to be in till you understand what I mean. They scout out for the best opportunity and they position themselves. And those people we know, we call them the big dogs. They are sitting on millions and billions of dollars. Their positions are worth billions of dollars. So for them, they don't come into the market for these small opportunities we look out for. So now, since we have gotten that, let me move to the market structure. Let's see what it does. The market structure, if the market, you need to also know the kind of trader you are. the kind of trader you want to be at that particular position or that particular week or trade. If you are looking out to be, let's say, a swing trader, you are going to use the daily time frame for your market structure. The daily time frame. Let me tell you something. The trend is your friend. If you get a trend wrong, you have messed up. The trend is your friend. You stay with the trend. So a swing trader is going to use the daily time frame to look out for his trend, the trend of the market, the direction of the market. And we have three different directions of the market. We have an uptrend, which is in the buy side, and we have a downtrend, which is in the sell side, and we have a consolidation. That means this market is in a range bound market. It's not showing any direction. Let's first of all look at it. When we look from here, this particular place, let me use this rectangle to highlight it. When we look from here to this current trading price of the market, we will notice that from here to here, this is an uptrend. It's an uptrend in the way that it keeps respecting its lows. If it forms a low, it doesn't break it. It respects it and forms another one. These people use as support and resistance to do whatever they want. So you realize that it respects its lows. It does not break their lows. When it creates a low, it respects it. Sometimes you can get into it, like this, for example, but I did not break it. You can see that. Then it creates another one. It creates a low and creates higher highs. When it creates a low, it creates higher highs. Low, then higher highs. Low, then higher highs. The reason why I don't use this as a signal to take a trade is because sometimes these market makers can come down to just dip into it to rate stops. So if you are not careful, you are going to tend to dip into to rate stops. So if you are not careful and you use this as a means to just take trades, you are going to fall for it big time. You see this, for example, they just dipped into it to take to rate stops, then the trend continued. Lower lows and higher highs. Lower lows and higher highs. You see that? Good. It continues like that. So this is what an uptrend looks like. Now let's look for a downtrend and see how a downtrend looks. Let me use another pair to look at a downtrend. Okay, so let's look from here. This price level here. To this price. To this level. As we all can see, this price, this level here, this is a downtrend. The market is falling down, it's going down, it's in the sell side. It creates lower lows. It creates a low and it breaks it and creates another low. Then it will create lower lows and be respecting the highs. It creates lower lows whilst respecting the highs. That is what a downtrend is. So this here is a downtrend. I told you we have three types of trends. We have we have two types of trends actually, but we have three types of market directions. We have the uptrend and the downtrend, but we have a consolidating uh, market, and all those that consolidation market, we can also call it a range bound market or a sideways market. They don't show any direction. So let me look for one like that and use it to show you an example what a range market looks like. So I'm going to highlight this whole portion for you to look at something and let's analyze it. Let's analyze this. As you can see, this price level from here to here, this is what a range market looks like. You see that? This market went up, it fell, went up again, fell, went up, fell. That is what a range market looks like. We are even in the 1 hour time frame. Let's go to the daily time frame to look deep into this. And let me see if I can find a range market. This, if I highlight this and take it down to the 1 hour. Wow, it will be a very good range market. Let me use this. You see this one too? This a range market. You see, it was showing no direction until it broke it. I don't want to go deep into this, but this is even a setup on its own, but I don't want to go into it. This look here is a setup, but I don't want to go into it. So it ditched that and finally broke it and went down. That is what consolidating or a range market looks like. So you first of all have to find. I'm going to add this to it because of the newbies, people who don't even know the kind of traders they want to be. You need to know the kind of trader you want to be, whether you want to be a swing trader or a day trader or even a scalper. Right now, you have the opportunity to choose between these three: a scalper, a day trader, and a swing trader. You get that? But I am very dynamic. Personally, as a mentor, I'm very dynamic. I'm not stick to one trading style. It depends on the setup I see and how I react to it. I can see a setup in the 1 minute and 5 minutes. I do my scalping and I'm out. If I see setup that demands intraday trading, I do my day trading, I'm out. If I see one that demands that I should stay in it for long, I do my swing. But you as a newbie, you need to choose one style and stick to it because of your psychology, to develop your psychology. That's what you have to do for now because you don't really have the experience yet. So you need to know the kind of style you want to be. Then you stick to that. So this is your market structure. Your assignment is go through the chart and look for these three structures I've seen, and you post it. You do the work. Take you can even in your jotter you can even draw how those structures look like, how it looks like, and everything. I told you that an uptrend creates higher highs and it respects the lows. It doesn't break the lows. That's what an uptrend is. A downtrend breaks the lows, creates new lows, and respects the highs. Then a range market or a consolidation doesn't show any direction. It's like a zigzag. It just moves sideways in range. It doesn't show any direction. So go through your chart, spend time with your chart, and look for this market trend. You need to know your market. Without a market trend, it's zero. Any analysis you do is zero. You need to know your market trend first, and the style of trader you are, whether you are a scalper, day trader, or a swing trader. You can only choose between these three. You are not an institution to be going for the long-term trading. No. You can choose between a scalper, a day trader, and a swing trader. This is the only three you can choose between. So take your time and go through this whole chart all over again. Go through your chart. Select just two. As a newbie, select just two pairs that you're going to master. Learn and master. So select those two pairs. Then you must. I started with pound and dollar and pound and yen. Those are the two pairs I started learning with. But now I've added other pairs. So just spend time with it and steady. Go through your chart. When you go through your chart, you take a screenshot of it. You draw out what an uptrend is. You use the rectangle to highlight what an uptrend is, what a downtrend is. Then you post it on your platforms. So that is the uptrend. That's the topic for today. Thank you. Good trading.